that the stream is running slow, or you may not see the right slide. So let me know. I won't go full screen because Discord kind of loses its head when I go full screen and present. You should be seeing a slide which says what are meme coins. Are you there?
I can see your screen, Ripcord.
Okay, so quickly give an overview on things, right? So there are two parts to the whole shitcoin ecosystem. One is meme coins, and then shitcoins as such. So meme coins are the ones which kind of are born at the back of a joke or at the back of something that is kind of happening. Like it could be Elon Musk said something, or he said Doge, and then there are gazillion Doge coins that suddenly show up with different variations. Or right now there is ordinals, which is the meta. So there is in front of every famous coin like Doge and SHIB and everything else, there is an O now. So there is an O Doge, there is an O SHIB, Barium, and a few other things. So shit, meme coins kind of are born at the back of funny jokes or memes or something that is trending on Twitter in general, or sometimes it's also geopolitics. Then on the other side, you have shitcoins, which are basically just random stuff. Like there was, I don't know if you guys remember, there was this picture of Vitalik having a boner, and then there were like 10, 15 boner based coins that were launched on the day. It's funny because the timeline in which this happens is insane. Like you would have seen a celeb or someone tweet about it, and then in the next 5 minutes, you will see 10, 15 coins launched straight off, because that's how the meta tends to work. Um, there is utility in some cases. There is simple tax farming in other cases. Sometimes there are rugs. This is what you tend to navigate, or this is what I tend to do. So in a given day, if I'm calling one or two tokens, that means I would have at least looked at 20, 30 before I chose this one over the others. And then it's also sometimes to do with the timing, which I will cover in case of B tools, and as an example when we go to that particular chart, right? So moving on to the next one. So the general tendency with shitcoins or the meme coins is the properties of it, for a lack of a better word. Um, you are used to doing technical analysis and functional analysis, drawing lines and graphs and bars, and support and resistance lines in general when you're trading like stables or even alts. That doesn't necessarily, in most cases, doesn't apply to shitcoins, because this ecosystem is purely based on hype and then a community of audience, right? So you could see something like Optimus, which I was talking about, literally started as at the back of Elon tweeting his bot is going to be called Optimus. That's it. That was the origin stories of Optimus token. As of yesterday, that thing hit 50 million. Now I think with the whole marketing dump, it's somewhere around 37, 38 million or so. But that's the so basically, because that kind of started taking off, they started thinking of what utility do you want to add, or what are the things that you want to do. So sometimes things go on the fly, while there are also examples like B tools that that I pinged about yesterday, where they have a proper plan. Like they want to deliver a couple of utilities, and then that is how they would sustain themselves into the market. So this very clearly has to be driven by the community. A lot of these conversations only happen in Telegram. So this is primarily the reason why I always insist in people joining Telegrams, keeping an eye on your own investments, because if I can't, and this is also why I don't call exits, because one, it is impossible for me to just stick to one or two Telegram channels and then see what's happening and then call an exit. Two is, it's difficult for me to understand what was your entry point. I may have called it at, I don't know, at 100K market cap. You, by the time you got in, it is at 200, or it was at 50. Now makes it difficult for me to kind of give an exit individually. So calling the entry, or kind of giving you a heads up, it's not even entry, is my job. Uh, Probably this is a good time to mention. When I call, obviously you would have a lot of people who are looking at it, right? So either some of you are quick enough, and then you just directly jump at it and then start nuking the charts. So I always tell people, if you are buying on green candles, just see where you are on the green candle. If it's already too pumped, or you're already seeing a big green wall, big buys going in, then it will dump a little. It will have a pullback. So just hold on, wait up. And it's okay to miss a position, and it's all right. But to get on top and then you being exit liquidity is the horrible part, right? So always that doesn't mean every time there will be a pullback. There are cases where I called something and we were hoping it will dump, but it just didn't dump. It just keeps climbing and climbing, and at some point, whoever threw an Ethereum at the bottom, then like, okay, I have 10 Ethereum now, I'm gonna sell. So that starts a big nuking, right? So you nuke the chart with one ETH, and then you dump 10 ETH on it. So immediately, everybody who bought after that or who was trying to buy now suddenly see a red candle and start panic selling. So you need to kind of be very strategic where that gets in. The next one is honeypots. Honeypots are simply smart contracts which will accept your ETH, but you will not be able to sell the token. I'll show you an example as well on a chart where I got honeypotted even after all these years. But there's a lot happening even with the honeypotting, because you tend to check the charts, you tend to check the contract, and a bunch of things. But now there are devs are getting a little too smart with delayed honeypotting. So at the start, you would see that you're able to buy and sell. Oh, honeypots basically are when you can buy, but you cannot sell. The sell tax on that is probably like 95, 99%. That means even if you want to sell, you would hardly get anything back. So what's happening is there are websites that can tell you if a particular token is honeypot or not. But for a token that is literally launched like a minute or two ago, these websites are not necessarily accurate, because they need to monitor for a few things in the contract, including am I able to sell the contract, sell on this particular chart, right? So by the time that information kind of gets collected, the data gets analyzed and put into the chart and the website to reveal it's probably going to take a while. So even though sometimes a token may be referred to as a honeypot on a token sniffer, it could be that you were checking it too early, and then you're getting that message. So check to keep an eye on honeypots for that. FOMO, we already spoke about the green candle, so just hold off. It's better to not buy on a giant green dildo versus buying something on a much smaller one on reds. It's always buy the blood is still applicable. But be very careful of what part of it are you buying again. If something is dumping continuously, there is no point you trying to buy in. But that's also where DCA comes into play, which is dollar cost average, right? So that, for example, if you bought a top at the top on a green at, I don't know, $100, and then you got 100 tokens. Now suddenly it dumped, and then or you have an intel that this is gonna do okay, and it dumped to 50. Now your dollar cost average when you again buy for another $100 is going to put you somewhere in that mid range. So always try to DCA down. And one tip I can give you there is, if you're buying on a green candle, buy small, because if you are fairly sure that it's going to have a pullback, then just get a position in case it never comes back. You would have a position, and then you still have an entry. But when it has a pullback, now you can buy for much cheaper, right? And then you can DCA dollar cost average your position to a much better spot, rather than buying heavy at the start and then wanting and then getting dumped on, because then you need to literally almost buy the double the price to kind of stay even. So that's another piece that you'd have to be slightly cautious about. Expected to rug, unlike NFTs, where you'd see this happening for a couple of weeks, and then Discord is set up. You are able to see the whole thing. Builders saying we are building in the background, mods kind of trying to cheer you up and drink water stuff. There is at least a good timeline on it, right? I mean, at the time of mint is when you realize, okay, this project is a drainer, this project we are minted but is rugged. All of that kind of happens later on. But with the NFT projects, the shitcoins, they can rug instantaneously. Like they can be honeypots where you can be rugged with liquidity removal. There could be projects which have good intent, have collected have good utility in place, are doing everything right, but the community they don't get the support from the community. Was there a question? Okay.
Stars itu.
Then
That's right.
that's okay. Then the basic thing, that's what I said. So the whole ecosystem
Oh,
really runs
kasih itu
on
HP cas.
support.
Buat mami.
So you need to kind of be cautious about
What
being
can go
able
wrong?
you're available in it. So there are multiple types of rugs. I will talk about it
Look
shortly.
at me. Podcast. That's
Hey, Welly, you want to mute your mic?
Okay. And then there is other couple of other things, which is cheating. Cheating is basically when there is a pump or when they're trying to build a green wall, you basically are trying to take an exit or nuking the chart downwards, right? So yeah, this always happens, especially for people who are buying really early. They tend to buy for really small amount, but because they bought early, they hold a significant token ratio percentage of the tokens, and then when you're happy or you just want to move on, you just dump the whole chart. So basically you're nuking it all the way down, which kind of scares a lot of investors, or people who are trying to trade, right? So that is always expect it to happen, but this is what the game is. So if you want to be nice to people who are buying after you, then expect someone who bought before you to cheat on you and take your money and run. Then buying on green candles. Sorry,
I have a
was that?
question, Ripcord. So on that topic, so would you say, because obviously when you're DCAing while the candle's dropping and yeah, you're looking to DCA, what would you say gives you confidence in the project in saying that you're going to DCA while it's dropping? Would you say the hype of the meme, or would you say it's the community, or would you say it's the utility of that? What do you think is strongest, or balance, or does it depend?
Yeah, it's a mix of all those things, right? So sometimes you are DCing because let's say there are a couple of snipers which bought like 5 sniper wallets which bought 0.01, and usually they are out bet 10x. Like if they bought 5x or 10x range, right? So if they bought for 0.01, and then depending on where they got in at the market cap, you can expect them to start selling around 45k, 50k, or 100k because they've already made that big buck and they just want to move out. So when you see the on the Etherscan or even on the chart, you all the way when you go down to the last transactions or the first transactions, you can see how many snipers are there, and you kind of analyze how many snipers are still left. So if you have, I'll show you on the chart how to find these snipers and these kind of trades as well. But what you're really
Perfect.
looking for is when people are selling, are these snipers that you bought early that are selling, or are these people who are from who already have been airdropped some of these tokens that are selling? So they are different things. When a project
Okay.
launches, obviously. Mhm.
Sorry. So what you're saying, just so I can make it clear to the people that are listening, what you're saying is it's important to take time to actually check inside the contract, look in Etherscan, actually see what's going on early on through the launch to make your decision and judgments.
It does, and there are times when I can pretty much also tell you if I'm fairly confident, if I know the devs or if I know the project and then who is on board, um, and we know it's going to do well and it has more legs than surviving for 10 minutes. That is something where you could pretty much double down and say, yeah, and then if there are things like things that are getting built for something which is really big on the ecosystem. Like last month, it was all AI meta, and then before that, I think it was Pawn meta, and a few other things around that, right? So you basically need to look at these aspects as well: how active the community is, who the dev is, or how much marketing that they're planning to do. This is the other thing. So there are taxes that we'll talk about briefly in a while, but there are various such combinations that you'd want to look for while DCing. But again, you would see this kind of buy sell pressure as well. So as soon as someone nukes the chart or sells on a chart, if you see people immediately trying to take their positions, yeah, that means people are really bullish about whatever is happening there, right? So until yesterday, for example, if there was a sell on Optimus as a reference, immediately that sell of, let's say, 5 ETH, someone would have sell for 5 ETH, then immediately that would have followed up by another a couple of 2 ETH drops on it, or one person just buying 10 ETH straight up to get the position and above, right? So that always
Yeah.
happens. So DC also depends on at what point in the market cap or at what point are you in the chart. You might be
Yeah.
slightly worried to DCA at the initial hours, maybe because you don't know the direction of the project. But if it is something like an Optimus which is already established, you know it's only going up. If someone's selling, they're selling. you would want to DCA and then get those positions, because your DCA should always be on a profitable side. If not profitable, you should be on the median, on the mean side.
Mhm. Makes a lot
Expect.
of sense.
Mhm.
So basically, if a project is established and you're seeing people sort of cheating, but they're selling their positions in profit, and then you're seeing people a surge of volume after that. That's an indication that people are still bullish and looking to DCA as well.
Yeah. On a chart,
Okay,
there are a couple of things that will also give those hints. So I'll show you when we get to the charts. And
awesome.
then I'll put both expect FUD and don't be greedy together. Expect it to FUD for established tokens, for example. I mean, you would see the kind of FUD you'll see in Telegrams is just another level. But expect it to FUD. This could happen for multiple reasons, but most often you would see people coming in to FUD a project if it's already doing well. They just want to take a position. Obviously, that means they want to buy low. So you would actually have, in fact, I've been in communities and telegrams and private groups where they actually have a plan and a strategy to go for the group and then take those positions. I've been there, I've seen that. Simply because you want to take a position, you know it's going to do well, but you just don't want to buy at that price. So that is possible. While the regular FUD is also possible, because sometimes if the devs or the project founders are greedy or they are not of the best intentions, you would see initial signs on the project where you're not comfortable with it, or even people who are smart enough to know how to read a smart contract, or kind of can read ether scans, understand a couple of wallet traits, etc. They can come back in to with information saying, okay, this is not right. The dev has a very big tax farm. It's a tax farm that's happening. They are not ready to sell or spend it back on the community. They don't do any buybacks or various aspects, right? So there could be some tell signs which are obvious and that will cause FUD, but there are also certain cases where the FUD is purely because someone else wants to take a position, and that is, yeah, it's basically to win in a way. And
Yep.
greediness is the other one, which is, yeah, while planned FUD is one part of the greediness, the other part is uh, wanting to take profits, right? So oftentimes when you start making money or when you see this kind of profits come in, you see a 2x, you see a 3x, you're like, I think this is going to go 5x, and then suddenly you're in -5, right? So when you see profit, I always recommend, especially if you're new to trading and new to trading the shit coins, look at 2.2 to 2.5x profit range, and then just decide accordingly. So what you could do is either take out your initial set, take out some profit. So you kind of have made some money at the trade, and that means the rest. I don't know. Let's take an example. If you threw one ETH and then you're up by 2.5 ETH, uh, I would ideally suggest you to kind of sell up to 1.5 ETH or 1.5 ETH and leave zero point 0.5 ETH as a moon back. So if it does well, great, you would have made 0.5 profit on it. But if it doesn't, then yeah, then you could just you could have just if it does well, you would have 1.5 with you plus whatever profit is happening on that zero point 0.5 moon bag you have. If it doesn't, it's fine because you only invested one ETH, but you walked away with zero point 0.5. And even if from the other zero point 0.5, you'll at least make 0.1, let's say. It's overall you're profitable. But the moment you think, this is going to do well, I'm going to sit on it and then let it go up, and it's very obvious what goes up has to come down, and this is where you'd want to be careful. The reason why I ask you not to sell your whole bag, obviously you can just sell the whole thing and get out completely. Is in cases there are projects where they suddenly moon, like they bite, for example, today. There are projects where I have small moon bags left out, and half the time I don't even recollect or remember that I have. Then I need to go back and check into my wallets, and I have a log. So I need to basically check, okay, is this anything that I still hold some tokens of? Right. So Byte, for example, this morning out of nowhere suddenly started mooning. Then I had to go back and see why that happened. What it essentially did is I had a moon bag in it and of about 0.3 or something, and it pumped all the way from 700K to 2 million. Now my moon bag was worth much more than just that zero point 0.3 I left there. So it's possible that your tokens that you would have left there to be moon bags can really moon, or sometimes you just want to totally exit and then look for another play. That's up to you. But being greedy is something that will at least in the very initial days when you're working your capital out, I would I would highly recommend you kind of take exits, clean exits, even if it means your token that you're in has done. You exit at 10 million and then it does 50 million. It's fine. You didn't lose money end of the day, and that is important. This is the 80-20 rule so that I follow. It used to be 70-30 in the bull market. Now it is 80-20 with the bear market and the kind of shit that's going around. So the rule here, the plan for me is usually if I do 10 trades in a day, I expect 8 of them to like fail. Like they could rug, they could be honeypots and whatnot. So if I'm working with, let's say, an ETH on a day, I expect zero point 0.8 to be lost. I'm talking on the higher side. But yeah, we all know it's not. You don't invest zero point 0.1 ETH in everything. Then all I need is 2 tokens to do well that I get that money back, right? So that is typically where you want to work. That's typically where you would want to kind of plan your financials around it. Now, entry into shitcoins or meme coins is usually because it is high risk, high reward. If you are starting off fresh, then yeah, you'd kind of do 0.05s and then sit and play. But if you look at some of the charts, you'll see people throwing 1 ETH, 2 ETH, or half an ETH right at the start, like as soon as the token launches, because that is when you can make really, really big money quickly, right? So at the start of a launch, let's say you throw 0.5 ETH at 10K market cap, and it is fairly easy for a token to do 20K in, at least in the bull market. This is what I used to do in bull market. Almost every token would be 800K, 200K for no reason. Like it launches, as long as it doesn't rug, you would expect it to do at least 100K. So I would throw in like 0.25 to 0.5 ETH in it and then just wait. And as soon as, and depending on where I get in, so even if I got in at 10K, 20K, 50K, you would know that this particular project would at least do 100K. That means you're 2x. That, which is good, right? So your 0.25 is now worth zero point 0.5. Clean exit or leave a moon back, depending on what token it is, and you're getting profited faster. But if I had to throw that same zero point 0.5 ETH at 50 million, it's going to take me a long time for it to double, right? Because then I'm looking at a market cap of 75 to 100 million for that token to kind of really go down profitability or high profit, high return path. So you need to take into accounts on at what market cap are you kind of getting in. Ideally, I recommend people to kind of make a note of when they got in. You'll see that market cap when you buy on the token itself on the chart. I'll show you that as well. So make a note of when you got in, and then you can calculate your exit points from there. So if you got in at 10K market cap, 20K you're planning to take 2.5 profit, 2.5x, then you kind of you're looking at a market cap according to that, and then as soon as you hit that, exit, right? So that little planning is something that you could totally do. And I'm saying 2.5x, but that is because you need to account for gas, you need to account for transaction taxes and all of that. So 1.5 is basically, if you do 1.5x and exit, you need to make sure you didn't pay too much gas, you didn't pay too much taxes on and in and out, and then whatever is left is your profit, right? So instead a 2.5x is gonna get you a better profit range. But yeah, everybody's profit making is their own decision. So don't just stick to I'm sticking to this coin until it makes 2x or 2.5x. If it's not really getting there, just sell it and get out, because there's another play always. What to look for? I keep banging around market caps, and why I keep posting the market cap is this is one of the easiest ways for you to track your profitability. Depends, like I said, depending on when you get in, depending on how much market cap it has done, you can calculate how many x's profit or loss you made, and move from there. Liquidity is another aspect. So liquidity in this case is, you need to, for the transactions to happen, buy and sell to be healthy, you need to have liquidity or ETH added into your liquidity pool. This is what defines if you are able to buy and sell a particular project. Like again, take Optimus for example. I think as of yesterday their liquidity pool was around 1.5 million or something. If the top holder, who I think at the time had 5.6% or something, decided to sell all his tokens and get out, uh, I think that was about 100, I don't know, about 150 or 200 ETH or something. offer that 5%. So that means if you did not have enough liquidity into your added into your contract, even though I am worth 500 Ethereum, for example, I cannot withdraw that 500 Ethereum. I can only take a part of it, right? So that means if that liquidity doesn't exist and you exited, people next to you are stuck there until liquidity is added into the pool. So this is something that you really need to, I particularly pay attention to when I call projects. Obviously, at launch, your liquidity pool is very dependent on how much the developer or project owner has added to it. But there are strategies around how liquidity gets added by the team. You can see all this information on websites when a token is launched. You can also monitor it on DEX tools and all these places on how much liquidity exists currently. Socials, like I said, it is very rare to have discords. Shib has Discord, and a few and NFAI, a couple of big projects that are already established have Discords. But otherwise, a lot of this business really happens on Telegrams, and all and Twitter kind of plays a good role, significant role in marketing because the community's job is to get those buys, spread the word on Telegram, on different Telegram channels, different projects, other groups. Also, come bring it up to Twitter and then tag all other influencers and marketing people to kind of get their attention. Right. So that's why socials is extremely important. There are times in the past month or so I've seen projects launch without a website. It is not new, but I would be cautious of buying into a token that doesn't have basic things like a website, a Twitter handle, or some information about Medium page and things like that, because you need to put that little effort for you to have good investors coming to you. Right, so that's on the socials. We'll also see where to find the socials. Age, buy versus sell, and honeypot. We already covered honeypots. Buy versus sell. I'll show you about. I'll talk about this on the chart. Age, again, this is where your risk mitigation comes into play, right? So if a token is as new as a couple of minutes or a few minutes, then you are playing on a slightly risky end because you don't know the direction in which this particular token will go. It might rug immediately. It might be a honeypot. It might be something that is going to run for a long time. So that is another aspect that you'd want to look for when trading. Yeah, so that's on this one. Token launches. I think I'll have to speed up so I cover more on
So,
the
Ripcord, I just have a question, bro. So, when before the launch, can the devs? So, obviously, with the liquidity, you'd have to trust that the devs are going to inject some liquidity into the pool. Are there any promises before a launch? For example, like a scheduled injection of liquidity, or can it be added into the contract so that it's not lied about or anything like that? Or is it just trust in the devs?
No, you can see the liquidity already added onto these contracts.
Okay.
On ether scans, I'll also show you on dex screens and dex tools where the liquidity exists, because again, by rule of thumb, if you want to launch something on Uniswap, there are guidelines that you need to inject. This comes to tokenomics, but there is
Got you.
guidelines around a minimum amount of liquidity that you need to add into that. A healthy liquidity pool, if a particular project is serious, they usually tend to have a strong liquidity pool at the start. So if the liquidity pool injection, it's both good and bad and ugly, because snipers and mostly the snipers kind of scan for liquidity pools getting added. So the couple of things that the sniper looks for before they go sniping is taxes. Two is how much liquidity is available, and then the token max transactions and what's the max bag on those tokens. Right. So
Yeah.
when a token launches, you can already see this information on the contract, not inside the contract, but on the charts. I'll show you that as well, and I'll also show you a little trick that I use to find these pairs. It's one of the many, but I'll show you how this thing comes through.
Awesome.
Um, with token launches itself, there are various ways in which these token launches happen. Some of them are fair launches, which means everybody gets the contract at the same time. So this means when I kind of give you a pre-sale, or the token is about to launch, here's the Telegram, join this. That is basically there. What happens? What could happen there is two things. One, it's a fair launch and a stealth launch. Stealth launch is no one knows when the contract's going to drop. You kind of get a window saying 6 to 9 p.m. maybe, and then you're just waiting, which personally I don't like. But what this does is it kind of avoids getting sniped, because no one knows when the drop's going to happen, and then people just can't wait and snipe it immediately. That's stealth launch. Fair launch is when you know exactly when this is going to launch, and then you also know when everybody is going to get the contract at the same time. So that's the two parts. In both these cases, it is possible that the developers or the own project owners would have had reasons to airdrop some of these tokens to one people who have bought it in pre-sales, which is what you see in pink sales. Pink sales is like your CDFI rounds. It's a portal website in itself where you can monitor some of the established tokens or tokens that are a little more serious about raising initial capital and raising initial funds by doing a pre-sales event. So it could be that the token had pre-sales initially, so all the holders would get some tokens airdrop. There is vesting period sometimes there is not. So you need to be that's another thing you need to be cautious about before you buy into a token is understand if it was a free launch, if there was a pre-launch, or if it's a fair launch where nobody has any tokens, everyone starts at zero. Airdrops is like I said, two things would happen, right? So if you bought something in pre-sales, then you'd end up with some airdrops at launch, which is when you'd either dump and then wait for the flow to pump a little and then just dump and get out, or you could have airdrops to some of these Twitter influencers and Telegram influencers who take a portion of the tokens as fee for kind of shielding your token in their own channels and the kind of getting volume for the project. So they could get airdropped on tokens, or they also can get paid in ETH or BNB, whichever they like to use. That's or a combination of both. So you can expect people to say, okay, I need 1% of the bag max bag, and then one ETH for a call. So that is again something that is possible, and project founders they would do that. They want to do that because this is no news, right? If you have been in any of the Telegram channels, as soon as the token launches, not even 5 minutes, people will be begging, when is marketing starting? When are you calling a particular group? When will a particular caller call this particular project and things like that? So it's a very impatient network, and this is exactly why it is shitcoins, because the moment you say you ask people to wait, or the moment you expect people to have some patience, there is none. They just want to make money, buy early as soon as possible, make as much ETH as possible, dump on it and get out, right? So all they will beg for is having people call it, so it kind of gets there faster, and then they make their money. Telegram, and this goes unwritten. Join in the Telegram. This is where all the updates will be. This is where you'd see how your own investments are gonna perform. If the community is strong, you can DCA buy more. If the dev is also being active, he's kind of sharing plans more proactively. You kind of get the vibe, and you want to stay in that for longer, or it kind of gets you the confidence. Then it was there a question.
That's
So
just a hot mic.
okay. At token launch, the last or the other one is buy and sell taxes. Usually, until very recently, all the token launches always had same consistent taxes. Like the tax wouldn't change at launch. You'd have maybe a zero tax token, or a 3% or a 5% or a 7% round trip, or that combination. But off late, I've seen a lot of developers kind of getting smart in trying to avoid these snipers coming in, or even sometimes it's tax farming, right? So that means your buy and sell taxes at launch might be really really high, like for all those snipers who get in, who tend to want to buy small max bags at a very small price, their snipers or their bots would come and buy, but they might be hit with a 95% buy and sell tax, right? So all those tokens you cannot really sell, you even though you paid $100. If I'm saying your tax is 95% on it, you're only getting tokens worth 5%. So that is one way where tokens have been launching off late. But the taxes kind of start getting smaller once the token launches happen, and then the dev slowly starts reducing the taxes. While that's an advantage, the disadvantage is uh, to do that, you cannot renounce your contract, which is a risky part in this whole business, because as long as a dev has access to modify the contract, they can reduce the taxes, increase the taxes, remove liquidity, mint more tokens, and then sell it on the chart. So there are all these other things that are possible. So this is another thing I look for in a contract when before calling is there enough liquidity? Is the contract renounced? Are there any hidden backdoors to mint more tokens? For which you need some amount of solidity, contract deployment, and blockchain tech knowledge a little more than you would expect, right? So you need to learn how to read smart contracts and things like that, which I've been doing it for so long and part of my other job as well. So I can do it to an extent quite well. So that's on buy and sell taxes that you need to look out for. And then this I already covered. High buy and sell taxes at launch. Mev bots is maximum extractable value. This is basically a bot that kind of wants to sandwich your transactions and take away ETH that you use in slippage and get you. The job of Mevbot is to extract your ETH out of a trade and get you as little tokens as possible, while that bot kind of consumes or drains your ETH into it. I'll also I'll show you a chart where this happens as an example. Scam TGs. While if you are in any successful tokens that are doing considerably well, be rest assured to start getting added into Telegram chats where they say we're gonna airdrop a token for you, connect your wallet here, or claim your airdrop tokens here. No token will airdrop anything free of charge for you. They will tell you in the original TG. The problem sometimes is they mock the Telegram channels so well, including adding people that you know from these channels into it without their knowledge. You just need to be very cautious in doing that. So scam telegrams and airdrop claims, they don't exist. They are not real. So just avoid even bothering about those channels. I use more than these tools that you see on the screen, but for simplicity's sake, this is what I would recommend. Right, Deck Screener is one of the tools that I use, charts that I use to see faster transactions, because Dex tools tends to be pretty heavy in its UI. Also, off late, I've also noticed Dex tools is also kind of doing quite well from a performance standpoint. This is to monitor charts and get some information. To swap tokens, to buy and sell tokens, I don't use DEX tools. I use Uniswap, 1inch, Boost, and a few others. But for this call, for people here, I use Uniswap, which is fairly straightforward to use. And 1inch has a mobile app. So you don't need to glue yourself to your laptop or your desk all 24/7. You can just install this 1inch app, mobile app, and you can trade into that. You can kind of import your wallet into it. It's safe. It's been around for quite some time. You can import your wallet into it, and then on the go you can trade and transact on 1inch. Rug samples, I'm going to cover this differently in different charts. Teasers, so these are basically things that the marketing teams or projects do to kind of excite you with what they're trying to do, or to make sure there is more marketing or more buys coming in. Is are some of these. So buybacks are when a team can buy the tokens from the chart and then put that money back, or burn that tokens completely. They can if they want to, right? So which means you're taking away some of the supply from the supply, reducing the overall supply, which means your same tokens are now worth more than what they were before the buyback happened. So that is one of the ways you could get your devs and projects would want to please you. And then marketing wallets. Like I said, every token that launches on DEX or these decentralized coins, everything, they either have 0 tax, that means there is no tax being collected. But most often, the serious ones or the ones that are trying to farm taxes, they have buy and sell taxes. So the distribution could be, if it's a kind of a simplicity sake, let's say 5% buy, 5% sell. It is the way they might use it is 3% for marketing, 1% for liquidity injection, and then 6% for dev taxes, or that combination. Right. So that's one of the ways where liquidity can be injected. So it can be done directly via smart contract, where every time a buy happens, you can inject some liquidity directly via the transaction into your chart. or every time a particular market cap is reached, you can automate that liquidity pool injection, or dev can take some of the marketing funds and then inject the contract into the chart separately. So you can see all these
Okay, that's
transactions.
interesting. So that can be previewed to the community in Telegram before launch. If they add that to the smart contract, could that be previewed to the community so that essentially people can get more bullish on the contract?
You can see this in Etherscan. They will also announce it most often. The ones, at least the ones that are serious about it, they will talk
Yeah.
about, oh, we just did a buyback, 0.1 ETH or 1 ETH or whatever. Because they want to make their investors more trustworthy. So they tend to hype it up as well, saying, oh, we just started and we burnt like 100,000 tokens of 1 billion. It's not big deal
Yeah.
because you have like 1 billion tokens and you burnt a very small fraction. But sure, it's something that kind of at least makes the whole thing a little more believable than just a token farming, right? So,
Yeah.
and on Ether scans, you can also see this happening when a particular contract literally just launches. You can also see liquidity getting added to it. There are portals and there are websites where you can see when a liquidity basically literally track what's happening with that particular contract, not necessarily in real time, but you can see things that the contract or the token kind of getting updated with creation of a contract to minting tokens to adding liquidity pool and launch and all of these other things. That one, burning tokens, like I said, every time there is a burn mechanism, it's a deflationary mechanism. There are projects which have had very extensive burn mechanisms. Like every time a sell happens, a part of that sell is burnt straight up. Right, so that means if you started with 100 tokens, that was the token I launched, like t equal to 0, the singularity token that I called. It had like 100 tokens in all, and the reason why it was getting so good, it was doing so well, is because there were only 100 tokens and it had this deflationary effect on it. At the start, if you had 100 tokens each at $1, but towards by the time you're burning the supply, your token was worth, I think it flipped the Ethereum at one point. It went up to $1,700 or something. Right? That's simply because the supply was so small and then the burn mechanisms were really aggressive. So it kept removing the supply or burning the supply, making your token supply less, so it's smaller. Hence, the value of the token significantly growing. So burn mechanisms is another marketing tactic that projects use to kind of get there. And then you have partnerships. Every time, like now, right now, there is a whole lot of things that are happening around Shibarium, all the Shib ecosystem, kind of talking about this project is every project that happening launching now informally are all labs. Labs are basically things that are trying to kind of mock something or with hope of these things happening. But the moment a big partnership kind of gets announced is when things start going massive. Like YMNT, the other token I called, it started having partnerships with NFAI. I think what else they had something with Suka airdrops and a few others. So that kind of also adds, because then you're saying, as a project owner, you're saying we are going to take this big, we are looking for a long term piece of work and things like that. So it kind of builds the hype and you'll start getting more people. Supporting tokens kind of ties into partnerships. So you'd say, okay, we buy part of that supply, and then there's basically interdependency or partnerships between two or three multiple projects on how they can all work together. L1s are, there are tokens that have launched L1 blockchains as well, and then there are bots like the B tools, bone tools that we saw yesterday had a bot in it. It will tell you it had. I think their Shibarium Sniper bot utility is yet to be released, but that is one of the bots that they have. The whole AI meta came with so much bots as well, right? Cat AI, AI GW, and a few others. They basically had lots of bots similar to ChatGPT kind of stuff. And then you also have NFTs and staking, which is another way of marketing, promoting your projects and further up. I'll cover slippage and then start looking at charts. So slippage basically, in its simplest terms, is the percentage of slider you would allow for a transaction to go through. Like, take an example for a project that is literally jumping in every trade and transaction, right? Like there's buys after buys after buys. Now that means if you said my slippage, if you set your slippage to 0, that means you're telling the smart contract, I want to buy for $100, 100 tokens. and buy me exactly that amount. If you don't put any slippage, the contract is going to try and execute go that command and use your gas because you're doing it against a blockchain, right? So, but if that $100 worth of 100 tokens do not come for $100 anymore, the contract's going to fail. Your transaction is going to fail because you didn't let it slide, and there wasn't that supply for the money you supplied. Instead, what slippage does is if you set your slippage to 30% in this case as an example, so when you put in your transaction at $100, I need 100 tokens, and your slippage is 30%. Now you're telling the smart contract to put a transaction through even if you get 70 tokens for $100, right? So the guarantee you have there is you would get some tokens, and this is up to you. What slippage you use is completely up to you. At launches, usually slippage has to be really high. You can on Uniswap, it'll allow you to go up to 49%. So you need to be ready to kind of get to that, saying, okay, even though I expect 100 tokens for my $100, it is okay for me to kind of get 51 tokens instead of 100. So slippage is that aspect. If you do not set a slippage, your transactions are going to fail. And slippage is also dependent on the tax that is set up. So if for a 10 by 10 tax token, as an example, your slippage has to be at least 11%. I usually go 1% above, but there are often cases in the recent past where your slippage may have to be about 15%, 17%. So you start with plus 2 to 3% delta. So for a 10% tax, maybe 12% to 15% is what is the slippage you're after. But it comes at a cost. So the slippage, while it allows you to make sure your transaction gets through, too much high slippage is when MEV bots come into play, because then you are saying then that is playground for MEVs, right? They're gonna look at the slippage that you put and then look at the transaction, saying, okay, this particular transaction is okay to receive up to 49% less tokens. That means I can juice out that 49% worth of ETH from the transaction, right? So this is where mavbots kind of are the happy ones in the whole play. But it is even more dangerous when it is zero tax tokens, because you cannot really expect to set a particular slippage. But at the same time, if it's a zero tax token and it is launching, then the nightmare there is, if you set your slippage too high, you'll get MEV'd. If you don't set a slippage, you will not get enough tokens. That means your transaction is going to fail. So you always need to kind of look at a trade-off. I typically set a slippage to auto when it is a zero tax token. It mostly works, but again, you basically need to kind of get to it. And that small comment you see there, which is your transactions may be front run, is about the same thing. So your transactions may be front run by a MEV bot, which kind of would take away some of the ETH that you're trying to put into the transaction, or somebody else kind of taking into the transaction. You don't need to have expert mode on in this. I use it because there's some pro settings in that. You don't need to get to that. With that, I think I spent significant time just on theory. Are there any questions? Otherwise, I'll open a few charts and walk you through them. Okay, let's do this quickly then. So Harsh, I'll start with a liquidity pool token. So the day I was calling Harsh protocol, somebody I know got this contract early and then said, "Hey, this is probably the Harsh contract," and I tried to buy it early, and that was a mistake because it ended up becoming being a honeypot, right? So in this case, you can see sometimes it's easy to see on a launched chart. Dex kind of has started this update feature where you will see if the contract is verified, if it's a honeypot, buy and sell taxes, everything is in here. So yeah, clearly it says yes, honeypot here, but this is only updated after the token launch has happened, and the whole thing. So I'll show you the Etherscan for this, which kind of shows you if it was a liquidity pool. How do you know if it's a liquidity pool? One is obviously that giant red bar, and you not able to sell anything. But on Etherscan, sometimes you also want to keep an eye on Etherscan to see if the team is draining any liquidity. Now, for example, in this case, here you can see that the execution of this contract basically sold all the tokens. So this is basically a pull of the contract basically sold all the tokens instead of removing liquidity or draining the liquidity. In case
We
it was
cannot see the
removed the
chart.
liquidity,
Sorry.
You can't see the chart because I was on presenting only my deck. Sorry. Let me stop sharing and go back to the chart. Just remembered. Okay, I'm gonna share the chart now. Let me know when you see it. Where are we? Where are we? Where are we? Hash protocol. Okay, you should see a contract. Etherscan, not a contract.
Yep.
Okay, so let me show you the chart quickly on what this looks like, and then we'll get to the. Okay, so yeah, so as you can see on the left side here is where now you can see for most contracts if it's a honeypot, what is the tax on it, etc., etc. This information is fairly upfront is upfront. You can also see the so this is where you have you can see what your wallet is worth, what your tokens are worth. You can buy and sell from this, but once you connect your wallet, you can buy and sell on this chart. You can also see you can use your Dex chart buys and sells. But let's say let's look at this one. Now, obviously, this is unimported, right? So I can't sell this. But clearly, if I wanted to sell, now that the whole chart, all the tokens were sold, my buys are worth nothing. But if I wanted to look at the market cap, all this information, it's here. So the liquidity on this is zero because there is nothing there that I can trade and transact. 24-hour volume, nothing happened in this in the last 24 hours, so it's going to be minimal. You'd see the market cap on this here, and a few other some other information about how many holders exist and then how many transactions are in there and things like that. Right. So this is where you see basic information about your overall contract on what market cap, what's the supply, etc., etc. Now on the contract end, when a full token, when a liquidity is removed, you here on the method, you would see remove liquidity as a function that shows up. But in this case, it was not a liquidity drain. It was a whole contract selling the tokens back. Right. So this is what caused that 6 ETH sell in the case of this particular example. Now, while we are on this chart, a couple of things that you can also look for are so the socials I told you about is this particular section. Actually, let's take a better example. Okay, Optimus. Okay, let this thing load, and then I'll show you how to check if a particular token that is launching is honeypot or not. So Optimus, this is the token that was doing considerably well. It had a pullback, but now it's back at 41. I think this fell all the way to 37 million as of this morning or something, and I did a small buy-in again. But yeah, so the socials on this one are this section. So this is your contract, this is your website, and then your Telegram is updated here. Twitter handles, if it's gone on CoinGecko, which is referred to as CG. A link to CoinGecko is up there, and then some more information, including you can add these tokens directly into your MetaMask from here, and stuff like that. So this is the socials part, which will pretty much tell you what how to access or how to get more information about that particular contract. Now I'll show you an example of how to find how to sniff out for a honeypot. Apart from this one, because this will take time for it to update. One other thing that you want to see for projects is this score, DEX score. As the higher it is, the better it is. When you want to check if a contract is a honeypot, copy this pair where this address, which is next to token, and there is a website called Token Sniffer. You can just paste your token address there. It will do the analysis. Now, obviously, because this is a token that has launched long back, it has all this information ready to go. Like I said, right? So on DEX, the token information, the score on this is 99 there, but here it is outdated to 38. So you will have to look for these kind of inconsistencies, but that's not a big deal. Now, in this case, if it was not if it was not Optimus, and it was some other project that has randomly launched, these two red marks are a big red flags for people, because it says the source does not contain fee modifier, but it does, which means at any point, I don't know, for whatever reason, if the project founder of Optimus decides to run, he can just set the fees to 99% and then just take all the money there is in this particular contract and run. It's possible. Yeah, but that's about $50 million of market cap that's sitting there, right? Plus taxes, plus everything, right? So because that is here, your buy and sell taxes are 3%. So 6% tax collected in taxes, and then your whatever market cap is, you can run with that. And this is where you see ownership renounced. So usually, if your contract ownership is renounced, you'll also see this as greens, right? Again, these are usually red flags that I would look for. This is again, sometimes token sniffer for newly launched tokens is not 100% correct, because it takes time for it to kind of read the data, read the contract, and update itself. Now, other things, like I mentioned, you can see what liquidity is available. That's about 337 ETH in sitting there in liquidity pool. Initial liquidity was started at 1.5 Ethereum, so that's the minimum liquidity that was added at the time. And then you also can look at how much token supply is burnt or is locked and things like that. So right now it says 68% of the supply is burnt. Whatever is left is sitting there in different places like Unicrypts, and this is where they have logged it, they have logged and kept it. Now, owner creator wallet contains less than 5%. This is another key aspect that I look into when I start looking into trades and coins. One other thing I look for is look at these particular contracts to see if that particular contract was associated with any other rugs in the past. Like, it may be possible that some of these contracts are copied, and you just use the same contract but that one rug, or so basically it's another thing. Right, so it kind of tells you if somebody messed it up or somebody tried to play around. So clearly there are this could have been a fork of one of those contracts, but that's what it is, right? So you can always copy a contract and then launch it. So while we look at that, I will also kind of draw your attention to, okay, let's look at the other aspect that I look for in a contract is the wallet distribution. Wallet distribution represents how big fat these wallets are for the holders, which means I usually like wallets that are under 2%, 2% to 3% maximum that any project individual can have in one wallet. Now, in this case, for example, there is about 14% set up in vesting, pool vesting, which is fine because this is basically contracts and tokens that are in a vesting period, similar to our IDO conversations that are happening. So they're locked and they will be released at regular intervals of time, which is fine. And then Uniswap itself has about 1.25% of the supply in it. That means that is the amount of supply available to trade. Now, if for whatever reason I decide to buy this 1.25% fully out, then there is no supply left on Uniswap, which means you are looking at a supply shock. And then rest, I think in this case, max wallet was 1%. So the top holder has the 1% of the bag. Right. So what I ideally like to see is a distribution like this versus something that is more haphazard, where one wallet has 5%, another wallet has 10%, or 4%, things like that. The problem I have with that is at any given point in time, if these top wallets decide to sell, you're doomed, because right away, let's say these top three wallets together had 15% of the supply. Now, at 15% supply gone or sold onto the chart, it's going to nuke the chart altogether and just kill the whole thing, right? So, which is why I also make a note of what is the wallet distribution on these particular tokens before I give it a call. So that's another thing you will have to, if you're trading by yourself, that is something you will also want to look for, is the wallet distribution. Um, I'll look for a Mavbot example. So this is another case. Ordinal Doge. This is what I was saying, right? So right now there's been also a meta around ordinals. As much as you're seeing it NFTs, that kind of has crawled into the Web3, into the shitcoin space as well. The funny part is this ordinal Doge sits at a market cap of about 10-11 million dollars today. It was much higher. Obviously, it has dropped significantly, but for the reason I'm showing you this is twofold. One is you can see a Mavbot which just came in. So someone tried to buy. Okay, this is 2185, right? So right now that's the trade volume. That's how much you would be buying it for. So this Mavbot, it's a zero tax token. So this Mavbot came in, tried to buy for 1.51 ETH. Now, if you look at the actual value, it is 2203, right? But the token itself was at a value 2144 here, if I bought it right now, which means the MEV kind of bought you those tokens at much higher value while it juiced out that Ethereum out of you. So this particular MEV that is active so far has had 8 transactions, or the MEV got triggered 8 times. In that 8 times, it has made about zero point zero 0.03 Ethereum. And in creds, I think I saw, yeah, this is where I saw the MEV kind of having fun, and a few other projects. This one is still not bad. So anyway, so there are these bots as an example, like I said, right? So you are buying your token at a much higher market value than it actually is. So this is why keep an eye on your slippage is always important. The other one is I also look for charts where they have dumped significantly and call them out, because you know they're going to go up. Like this one, I could have called this yesterday and said, okay, Doge is down, you can buy. The reason I didn't is because it was already at what I think it was about 7 million market cap or something, which is still very high compared to your zero point 0.05s and 0.01s and things like that. So you had to go big on this one, which is why you see most of these transactions are like in the order of 0.5 ETH and 1 ETH. Like you'd hardly see smaller transactions, but again, these ones could be trades that someone is making, trying to make like really small, or you're getting, this is going high, right? So there is no reason why you don't want to drop like 0.1, 0.2 ETH and just let it ride. Because from here, if you bought it at let's say 1240, right now that 0.1 is already double at 0.2. Yeah, it is already double. And then if you go to ATH, you have it roughly around 3 times or 3.5 times, right? So there are cases where you can also look for such drops from depending on the market conditions. Maybe it had dumped significantly, and then there is money to make. Like in this case, this is fairly simple and straightforward to look at, right? So I know there's a big sell-off that happened here. Now, going by the trend on this chart and the upward ticking, if you throw an ETH there, if you threw an ETH there, you would easily make that money, right? You would make some profits, which is why you see these big 1 ETH buy, 1.5 ETH buys, and 2 ETH buys there, nothing small. So yeah, and then it just keeps coming. So that's another way where you can sometimes make profits, but that means you will have to really go big, quick in and out. Because if you throw 1 ETH, there is somebody else sitting there who is ready to throw like 2 ETH there. You would make profit immediately, but if that particular person is DCAing, that means he already has a lot more ETH sitting there, and he's more profitable than you are at that point. So literally, this is what happens. You buy, and then immediately there are sales that follow. So this 0.22 ETH that was put in is basically dust right now, because he got sold on top for about 1 ETH, right? So you will have to be cautious about those kind of trades, getting into them as well. Creds was an example. I was trying to see if I could swing trade this morning. This is at the back of DistoPunk's token that launched my 3 a.m. ish. But yeah, as you can see, there is some opportunity, but I didn't want to bother myself with that Mevbot kind of going having fun. So yeah, so that's another part. And lastly, I think what I also look for is this total volume on the 24-hour volume, and then also how many buys and sells are happening. Maybe we'll go back to Optimus for example. Right. If you looked at Optimus in the last 24 hours, obviously it took a big dump, so it's not gonna look nice. But if you did a 7-day chart, okay, that the 7-day volume on this is about 10.5 million, which is equivalent to a token itself in some cases. And then the variance or the percentage change is about 500%, which is really good for a project. And this is something I also look for. And you also want to see how many buys and sells are happening overall, which kind of talks. So if there are too many buys versus too many sells, then you can pretty much decide the direction in which this is going, right? In this case, there are more buys than sells. So you can be slightly more confident about buying more here versus another token. I don't know, B tools, for example. This one started pumping a little from the bottom, and then again went down, which was expected. So yeah, in the last 6 hours, if you look at B tools, it had 30 buys and 26 sells. I wouldn't be very confident for that, because it's almost 1-to-1. For every buy there is a sell. There is no point trying to get into that and then swing trade it. So sometimes you can also decide based on these transaction volume if you want to swing trade, or if you want to get into the token or not. And lastly, the other part is the ones that the tickers on the top. these are the trending ones. So sometimes you can pretty much also ape big on these and make some money. Like Shik, this is the one I posted about I think 2 days ago, where they dropped. I think they dropped about 50% of their. They dropped a massive percent of their tokens to Vitalik, and for very reasons unknown, or he just probably wanted to troll. He just went ahead and sold almost 300 ETH worth of Shik tokens on the chart, and that created this big red line, a red candle, all the way killing the project. But I think the community started rallying, and this is where people saw opportunity as well, right? So they started buying the dips because people who bought, they had to DCA and save these investments. They can't really sell with such a big sell off. So they started buying, and this is where a lot. I know a couple of people who threw like 3 Ethereum and are up like 9 or 10 Ethereum now from that bottom. Let me see if I can pull that chart. Yeah, it was too big. Anyway, so the what I was trying to show you is it is possible to find opportunities of making money in a more safer way as well if you pay attention to these charts and if you pay attention to where there's money coming and going. Like, yeah, if you see the total volume in the last 24 hours, it is positive. There are more buys than sells, so that means you can invest in this token. Okay, now I can see the red. I can show you the red line. While I kind of show this, okay. Yeah. Any other questions? I think we are way past the 1 hour we had dedicated, but I'm happy to take any more questions you have while I pull this chart down.
Fucking hell.
Yeah, there's a lot more. Okay, so you see that red giant line? That is the sell from Vitalik. He just sold almost 300 ETH worth of their token randomly. There's no reason. He just sold, and then people who started buying here immediately were the ones who started profiting because 3 ETH here that one of my friends threw in easily made a lot of money here. Now wait till he has come till here, right? So if you see the opportunity, I'm not saying every time there's such a big sell off you'll make money, but you'll definitely, whoever bought here and held on and bought big are up very good ETH right now, right? So if the trend continues and if the committee manages to pull it up, then yeah, you can see clearly you bought at a really really low price and then you are almost guaranteed a good win here. So yeah, that is, it's not in short
It's been the
coins, but
motherfucking this thing not worked. I think that no, what the fuck? Are you guys still alive?
I'll
Was
stop.
that a question?
Like how? You fucking don't know. You fucking know.
It looks like he's hot micing. All good, good. Yeah.
Um,
The fuck? That's it.
okay, I don't see any questions. No, I'm just going through it. Yeah, no questions. Obviously, I'm around. If you need me, if you have any questions, you can always pull me up. That's about it.
I guess the name Memecoin really lives up to its name. I mean, just the sheer fact that Vitalik ultra dumped on everybody was a bullish sentiment for people to start buying in. I mean, it doesn't get more meme than that, right?
That's the thing, right? So is the thing, if the community decided saying, okay, middle finger to him, we're gonna pull this coin back, and then they started buying everything. So the community there kind of pulled everything, besides the fact that they were all heavily invested and didn't want to lose. So you start buying, you kind of start a trend, and that's where you start making people FOMO into your token, and simple as that.
Yeah.
Or Optimus, pretty much like I said, right? It started the back of Elon Musk literally tweeting, "Oh, my bot is going to be called Optimus." Done.
So
And
I
Cat
think that
AI
would
was the
answer
same
your
thing.
I think that would answer your question, Caleb, because Caleb's asked this question a couple times now. It's how do I know about the next Optimus? And just like Ripcord has mentioned, it literally pivoted off a tweet from Elon. So that's what I've noticed about meme coins as well. It's as soon as something pivotal happens in the space, if Elon does something, I mean NFTs is sort of similar as well, but I mean being meme coins, it's any hype that we can get off of people like Elon or etc. Anything that's meme worthy, I think is valuable. But yeah, hopefully that answers your question, Caleb, about how do you know about the next Optimus.
Yeah, I forgot about one thing. Let me quickly show you that. So this is where I was telling you. You can see liquidity added, how much is available, and a couple of other information. While I do that, I can also show you how I find some of these pairs. This is like old way of doing it. There are much more advanced methods, but it's a bit tricky to kind of throw you to the deep end. So what I used to do is open deck screeners, deckscreen.com, and go to new pairs. Oh, that was my domain. So sorry. Yeah. So go to new pairs, and I only deal in Ethereum based tokens. So I filter by Ethereum on the platform. You guys can still see the screen, right?
Yeah, we're good, Ripcord.
Okay. So what I'm doing right now is I'm trying to monitor the mempool to see what new pairs have been created in the last on Ethereum chain in this period of time. So I usually look for existing tokens which are new to the pool, because this is where you'll see maximum volume in general. So, and then this is also where I can literally look at a transaction, look at a chart like this, and then decide if it's a honeypot or not. And 7 on 10 times you are correct on that, because there is tell signs on some of these. In this case, for example, Prime AI, this is there is the way you can see if it's a honeypot or not is when you see these tokens kind of having buys but no sells. That's one way of looking at it. And the sells in this case, although it shows one, it is basically the dev fooling people that you can sell the token. But when you open the chart, the reality is very different. So you would only have like that, there's one sell but no more buys on top, which means it's already honeypotted. If I take that contract and put it in token sniffer, is going to call out it to be a honeypot. But the chart, the way I look for it is I filter it by age. So I can see the most recent token that has launched. Let's say this is Pound. Look at the market cap, look at the volume that has happened, and then I can also see how much liquidity exists on it. Now it is looking okay. It has about 64 buys and 38 sells. It is positive. In the last 11 minutes, it has done okay. So it is, you're confident that it is not a honeypot because buys and sells are happening. But what I look for particularly is this one, like ordinal Floki. So Floki is at 40. Last 24-hour volume is about 4,000. Or Odoge. This is the example we already saw, which has grown in the last 24 hours about at almost 13,000 percentage, right? So volume is also quite significant. There's about 800K in volume trades have happened. And so this is also one way where I can look at these deck screeners charts and then pick up a token from here. So if I wanted to call something, I don't know, Ofloki, for example. Let's assume this is like brand new, although this says it's 2 hours old, and it showed up here, and the percentage 24-hour volume on this is quite high. Let's say 16,000 on Ofloki, right? It's dropped to 14. Anyway, so let's say this is about 10,000, for example. Pound had a volume of 10,000 here, and it was not a honeypot. I would definitely come in and then want to invest in this one, because the market cap is low, so I don't need to invest. I need to buy a lot of tokens. I can buy small, get a while the percentage growth is higher. I can make small profits and get out. Right. So this is another way of finding. This is also a risky way to find these tokens. Now, obviously, you can see or ship. Now, this is a honeypot for sure. So you can, by the time you kind of see, do these kind of trades, you can kind of come to consensus on honeypots, identifying them or not. Like, so that's another, yeah, that's one other way where I can find these tokens. If you want to get pinged on all the tokens that are launching on Ethereum chain, you can add this to your Telegram. So every time there is a new contract that gets added to the mempool, you get a trigger onto your Telegram chat into a channel. I'm not saying it's the best way to trade, but you just get notified that, okay, there's a new contract that just launched, because you typically are seeing it much early than somebody else who does not have this idea of, oh, I can monitor mempools, or I can find out, I can get early pings on these contracts from somewhere else. Right. So that was, yeah, I think that was the only piece I forgot. How do you find your next token? But it's it's a risky way, but at the same time, you need to be well informed of how that goes. How do you like the arcade token? I need to look into it. Um, can someone send me the decks? I haven't really seen. In fact, this morning I have not bothered to look at any charts. There's only three tokens I'm currently on, and I didn't want to touch anything else.
So the arcade token is referring to the first opportunity in terms of the IDO investments through
Oh,
Genesis. So
yeah,
I can link you I can link you the files regarding that, and then you can if you
yeah,
feel like it, you can look into it. Yeah, for sure.
yeah. I can have a look into that if the tokens in. Okay, how do
Awesome.
you make arcade token? See because not sharing. I'm just going through the chat to see if there are any questions. Sorry. 80-20 rule, we probably should not just ape on random calls since 8 on 10 would fail. Yes, but that 8 on 10 is when you go do the research yourself and then kind of want to trade, right? If I'm calling, I would have already done that filtering for you. Fortunately, I have not had calling any rugs so far or tokens that have removed liquidity or pulled things up. So yeah, but and even my calls, right? I'm not saying they are 100% short mooners, but you need to be quite strategic in how much you invest in what calls. Sometimes your one ETH becomes two ETH in 2 minutes. Sometimes one ETH becomes zero in the same 2 minutes. So it goes both ways. Arcade. How do you like? There's so many people asking about arcade. Let's say you will want to enter pound now. Could you show the entire process? Yeah. Do you guys want to see what the process? There's nothing. I mean, I just take the smart contract, copy it into Uniswap, and straight up go buy. But obviously, I'll have to see more information than that. Not easy as I thought. Nah, there's a lot more to it. Yeah, but hopefully there are ways to automate it, and this is what Sean was also teasing us about a bot coming into play. We'll see. Don't put PDF in here, no leak. Okay. Yeah. Did you say your call is it's like 50-50? My job is to tell you there's a trade which will go good, but just because I called it, you don't need to buy into it. So far, the success rate, I think the only thing that didn't do well, or at least it did well for people who joined very initially on the call, is 9 on 10. I think so. 90% of the tokens I've called so far have really gone well. So yeah, Byte is also free money. There's YMNT. I called with what 35, 67. That did almost 2 million. So they almost all of them had like good 50x. I think there are a couple of 50x's already.
In Ripcord, we trust, baby.
I try my best. I'm not saying buy everything again because if I'm calling, I have made investment into it myself, or I would buy. I wouldn't call something I wouldn't buy into. So exits is something that is I leave completely to you guys. Like I said, I cannot call an exit for a gazillion reasons, but one of them, like I said, is I just don't know where you entered and with how much. People are still trading ordinal Doge. Fine. Anyone with 2-3 ETH, easy money to make in Doge. Anyway, so that was it. If there are more questions, I think I'm running another AMA tomorrow. Oh, there's so many people today. Shit, I didn't realize.
Thanks a lot, Ripcord, man. You really smashed it. For anybody that has any more questions or is still interested in this topic, we've scheduled another AMA for another time because obviously Ripcord information in AMAs is in high demand right now due to what he's doing in server. So look in the event channel in server. There's another scheduled one. Ripcord will be doing the same thing, answering the same questions or more. So yeah, if you want to, feel free to join, but we won't take too much of your time, Ripcord. Now, you're much appreciated, man, and keep doing what you're doing. I'm following you. The community's following you. I mean, not like sheep, but the research that you do for us is much appreciated. So keep doing what you're doing, man. And I've recorded this AMA thanks to Solji. Our May 6 subscription expired, so that's a bit of a rug, but I'll make sure to get a TLDR written up for this, and we'll see you in the next one, man.
Yeah, I do sometimes throw something on Twitter because I need to farm. I guess I'm told my Twitter presence is horrible. If you're not up there, just give it a follow already. But yeah, thanks so
Yeah,
much.
yeah. Drop your Twitter in chat, man. Drop your Twitter in the VC chat, and yeah, everybody follow Ripcord.
Thanks, everyone.
Awesome.
That's it for today.
Yeah,
Thank you.
thank you so much, man. Really appreciate it.
Yeah, bye bye.